Hello everybody, in this video I want to talk about DeFi project and specifically about high APYs and how to be sustained with them during the long term for DeFi projects and how you protect yourself as a users. And I want to share with you the question, a brilliant question from the community of Binance to CZ. It was part of their M&A session for their birthday, 6 years birthday session. And let's just listen this question and the answer from CZ. And I think it will be helpful for you guys because I enjoyed listening this a lot.
A lot of DeFi projects offer passive income in the way of a specific APY, but we also see a lot of projects crashing because of an unsustainable APY. Do you think that DeFi projects should ever offer a specific performance yield? And if so, is there like a number at which the number seems to get a little bit too high?
Okay, so I think that's a pretty interesting question. That's a very good question. Generally speaking, offering a specific APY for a long period of time is usually problematic, especially a high one. A low one may be okay. So, but for example, the earlier DeFis, the APYs dynamically determined in the market, which is much better. So when you lend your crypto to a smart contract that's providing liquidity for people to trade against, people pay trading fees, and those fees are used to pay interest. This way, that whole loop is closed. It makes sense. Whereas, of course, there's competition between the different projects. The newer projects, in order to win users, they will come and they will promise a large APY for a period of time. But many of these projects don't have users. So when they promise a high APY, they will have to give their coins out. Usually, like they issue a coin and they use their own coins to pay. That actually means more and more tokens of their tokens are being circulated in the marketplace at a high rate. And they also may not have enough income or users not spending enough of their coins so that the coin's price just increase. When the coin circulating supply increases faster than they can get users, then the price crashes. Then it goes into a vicious cycle. Price crashes, people lose money and lose faith. They get pissed off, and then they spread bad comments in the community about those projects, and then they lose reputation, they lose more users, and the vicious cycle goes. So, very fundamentally, I think using a high APY for a short period of time to bootstrap some users is okay, but after a certain period of time, you cannot do that forever. It doesn't work. After a certain period of time, you have to review and say, look, do we have product market fit? Do we have more users joining than the amount of money the amount of coins that they're spending? So as an investor, be very careful for projects that promise fixed high APYs. I think any double-digit APY is basically long-term very difficult to sustain, basically impossible to sustain, I think. There could be exceptions, but I think very difficult. I think APY is somewhere between 2 to 8%, depending on the project type, etc., depending on the market, is possible. But a dynamically adjusting one is much better. So yeah. So I don't think APY. I don't think using APYs, using a yield to attract users is necessarily a bad thing if it's done for short term to bootstrap users. But long term, there needs to be fundamental working business models where those coins are spent in some fashion, so that the total circulating supply does not grow exponentially or does not grow faster than the number of users they can get.
Great, thanks, CZ. All right, Joe.
Yeah, so I think that this is very great information from CZ he shared with us. So I think it's very critical for all of us to understand. So if you're the part of the project and you are investing early, as we're doing, like in Fair Protocol, Tectonic, VVS Finance, mm.finance, different types of project, and if it's like first period of time with higher APYs, it is good for us, but we should definitely understand that it will like this APY will go down if it's like all those projects provide us dynamic RPRs if it's like some stable and very high. It's very red flag, as he says, and I absolutely agree with it. But if it's like continuous and it's not enough users, but they are still providing those huge RPRs, the price will definitely crash because the circulation will increase. And I think everything he shared is very important, and it like I very enjoyed like this specific question. So I hope it will somehow help for you, maybe in your like finding new projects for future, or you could audit yourself the DeFi platforms you're using now, understand is it healthy or not. So that's why I wanted to share it with you. It is all actually for today. Thank you for watching. Have a good day. Bye bye.